It could certainly drop lower from here. I think what we're trying to do now is to set a secondary summer low in the metals and miners, which always tends to take place in late July, early August. So this may be a bigger move down than we would like to see, but it's not out of character in terms of the weakness that you tend to see in late summer.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is David Smith, the Senior Analyst at the Morgan Report and Ambassador to the Lode Digital Silver Project. David, thank you so much for joining us today.
It's good to be back, Elijah.
It's great to have you. And a very interesting day today as we're seeing the stock market pull back. Silver is down quite a bit, almost 3% as well. Your perspective on this pullback we've been seeing across all markets right now?
Yes, just about everything I follow is in the red right now, and it's a little bit like March of 2020. Whether it'll be that deep, I don't know. But the thing is, I think what a person needs to do or to consider doing when something like this gets underway, if it catches them by surprise, is to make sure that they don't have any margin, to make sure that their leveraged ETFs, if they hold any, are reduced in size or maybe not have them at all, and then to look at their ones that they have a profit in stocks and make sure that they want to hold the full positions on each of those.
If we look at the silver chart, it does seem a bit concerning. It seems like it could be testing a key support level. What is your perspective on where silver stands right now?
Well, you're right. It could certainly drop lower from here. Trying to predict these things when the market is so emotional is really not something that works out too well. The main thing is just try to predict how you're going to respond, which is going to be in a controlled fashion rather than getting caught up in all the emotion that's going on in the market. And all of us get emotional on this, but it's important not to lose what I call your psychological capital. That's absolutely a precursor to not losing all of your physical capital.
Can you expand on what you mean by psychological capital?
Well, it means holding to your plan and not throwing out everything in order to go to cash. And, some people will hold everything, others will trim. One thing I like to do in positions that I don't have a high confidence in, that maybe I have a small profit or a small loss in, but I think I might want to get back into them later, is to sell, say, 90% of it and keep that marker, so to speak. So you have the ticker symbol in your portfolio, but you've cut back down on the amount that you've committed to it. And you can do that with a large position too. But it definitely works on ones that you think you might. You probably will want to reinstate the position in. If you don't have any confidence in it, then just sell the whole thing out and go to cash. So there are a variety of strategies, but you need to have a sense of what you need to do in a circumstance like this in a way that accords to you specifically.
Now, one of the things that's quite interesting in the precious metal markets right now is we're seeing gold hold up pretty nicely, actually. It's only down a few dollars, but silver is down around 3%. So why do you think gold is holding up while silver is taking a beating?
Well, it could change this afternoon, but silver is more volatile on the upside and the downside. And if we get to the point, for example, if we have this going on another day or so, gold may start dropping because people sell what they can, not what they want to. People getting margin calls and things like that. That's why gold is more volatile. And of course, a lot of people on silver might be on the wrong side there, and they would have to offset their futures contracts. When you're 15 or 20 to 1, it doesn't take much of a price movement to give you some real pain.
And as we look to maybe the next couple months, where are you expecting gold and silver to head?
Well, I think this will shake itself out as we move into Labor Day. There'll be more participation by market buyers and sellers right after Labor Day. You go into a seasonally strong period for the metals. And I think what we're trying to do now is to set a secondary summer low in the metals and miners, which always tends to take place in late July, early August. So this may be a bigger move down than we would like to see, but it's not out of character in terms of the weakness that you tend to see in late summer.
So you're kind of expecting the weakness to continue until Labor Day, if I'm hearing you right.
Well, not necessarily straight through, but it could be after we determine this interim low, we could still see further sideways motion with a downward bias. So the idea being, if you've got some cash, to be watching for those special plays that you didn't think would drop that much, and then be willing to commit to them if you still have a high confidence that these are ones you really want to hold or increase positions in.
Now, with respect to kind of the fundamentals, it's curious that this is happening right now because June we saw, 5.4% annualized inflation. So we're seeing this really ramping up of inflation, and the Fed is saying, oh no, it's just transitory. But you'd expect this kind of inflation to be very bullish for the metals. Your perspective on that, and even though we've seen this very high inflation, Fed Chairman Powell is saying, this isn't going to impact Fed policy.
Well, first of all, trying to listen to what the Fed says and does is something that frustrates just about everybody. They are really clueless, I think, on the inflation argument. Even though they acknowledge that last month was pretty high, they don't think it's going to last. And I think that they're mistaken. I think we're going to move into a stagflation situation like we had in the 70s, but it's going to be a whole lot more pronounced because of a couple of reasons. For one thing, we're seeing higher prices across the board for goods and services, and we're seeing very high prices and questionable supply for foodstuffs. And also, we're seeing a response. I've noticed these we call anecdotal things, but I've noticed that consumers in a lot of different categories seem to be willing to pay what's being asked rather than to draw back, because they really are starting to get the idea that prices are going to continue moving higher. And if they need it, they should buy it now because prices will be more in the future and supply may be in question as well, too. So that mindset is changing on the part of Americans, whereas other countries that have dealt with this before and gone through big inflationary episodes, they get the drill. And we're learning what they learned maybe decades ago.
Now, in this environment, as you're describing, as we're seeing prices rise and everything among consumer goods, you'd expect precious metals to rise as well. Why don't you think that's what we're seeing?
I think it's due to manipulation. It's due to psychology. When you see sell-offs like we're looking at today, just about everything sells off. That's throwing the baby out with the bathwater, to make an old expression. But you can't expect rationality when the market is behaving irrationality. You can't control the market, but you can control how you respond to it. You don't have to be happy about it. You can be concerned, but just try not to get caught up into the emotion and start throwing things out the window because that's what everybody else is doing. In fact, if you've been following something that now has hit your price target, go against that emotion if it fits your plan and add more to it or add a new position.
Now, you mentioned how what you're expecting is stagflation going forward, which is essentially a slowing economy, but you're seeing high inflation. Why do you think inflation is not going to be transitory then, as the Fed says?
I think the supply-demand metrics are building on a lot of things that can't be redressed quickly. For example, the EV metals going on with the situation where there's, it's going to be years before copper catches up to demand. The same thing to a lesser extent with nickel and lithium. And so these prices are going, even though they're declining right now, they will bounce back more quickly because that demand is still there. The same thing with food stuffs, because we're seeing a lot of drought in the Midwest and other types of situations that are going to impact food supply. So these things are going to be with us, and they're not just going to come and go.
And how then do you think that will impact like the average investor? We've been seeing for so long this interesting situation where we're just seeing precious metals go sideways for the last 10 years. And also we're seeing the stock market rally so much. How do you think this will impact the investing environment?
Well, when the metals turn around, I think they could be very explosive on the upside. And I noticed today, for example, the bid-ask spreads are quite large on some of the miners. And also some of the better ones have bounced sharply from where they were an hour ago. So uh, somebody's picking those stocks up, or they wouldn't be moving up at all. So you just have to go with the flow and try to be calm as much as you can, and follow your plan that works for you that you've thought about beforehand. Now is not the time to be putting together a major plan.
No, that's a good point. Definitely, step back, breathe a bit, and understand that, markets are volatile sometimes. With respect to kind of buying opportunities you're seeing in the near future, do you think now is a good time to get into miners, or maybe hold off if we see the pullback continue?
I'm assuming your question references those who do not have a position in the miners or have a very small one, right? I think now is the time to watch how the ones that you have been following are doing. And if they meet your expectations and you've already done the research, then it can be an excellent time to start your position. Don't ever assume you can pick the bottom. So David Morgan and I always discuss buying and selling in tranches. So rather than having this, let's say a favorite that you really like, instead of taking your whole position now, take a third of it. And then you'll be hoping for lower prices tomorrow or next week so that you can buy another third. But if you buy all that you can, you're going to be panic stricken if it drops still further, because you think, and you can't respond. But buying in tranches enables you to continually do more of what you believe is correct.
Dollar cost averaging, I think, is a good idea, not just for the mining sector, but also when buying the physical metal. Your take on that?
Absolutely, because I don't know where premiums are right now on physical, but they had been dropping over the last few weeks a bit. They're still high historically. But again, if you were committed to adding, say, another portion, maybe you buy every month or every couple of months, just go ahead and do it with the amount that you would normally do, because you are dollar cost averaging, paying more at some point and paying less at some point, with hopefully things averaging out in a way that is accretive to your position.
And if you could remind our viewers a bit about, because you are an expert in the mining sector, kind of the differences between holding the physical metal, which is kind of more like savings, and the mining sector, where it's more of an investment.
Well, first of all, in terms of whether or not I'm an expert in the mining sector, I'm someone who learns every day. I'm learning some things today. And I'm learning some things by talking to you in terms of clarifying my own views. But, in the Morgan Report, we always counsel to buy the physical first, get that insurance policy first. And then if you're willing and able to accept a greater level of risk, because by definition the miners are riskier, then go ahead and choose a few that you've selected that you think are good ones. And we recommend things like looking at the junior producers or something that's close to production. And then if you're going to look at exploration plays, put small money into several rather than large money into any one, no matter how strongly you feel about it. Because time after time, we have seen plays that look really good, and we've reported on them after doing a lot of due diligence. And for all sorts of reasons, they always haven't come through with the way they said they were going to do it. It took longer, or they didn't do it at all. And if you have small money in several of them, you won't be knocked out of the game because one or two of the five don't perform well, or even one blows up. But if you went in too much on any particular one, you will either sell when you shouldn't because it was a temporary downdraft, or you will be, really emotionally bothered by it because the stock blew up.
I think that's key, that the mining stocks are more risky. What are some of the key things to consider when investing in mining stocks? Because I know management is a very important one, and there's thousands of mining stocks out there, but only a select few are often worth investing in. So your perspective on really how to find those select few.
Well, there's some good key items to be looking at, bullet points. You want management, ideally management that's done it before. You want a good property that has good drilling results already, or it's in an area maybe near others that are doing well. You want country risk that's lower. For example, a lot less country risk in Canada and the US, there's country risk everywhere, but there's a lot less there now than there would be, let's say, in Peru and Chile. And so, for example, Peru and Chile produce 42% of the world's copper. And so that's the place to go for copper. And yet you have to be careful there because of the changing winds of politics that are going on right now, and also the thinking about taxation. So spreading out your risk and avoiding certain areas that are maybe too risky is really a strong consideration.
All right. Well, David Smith, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had, and also where our viewers can find you online if they're interested in learning more?
Well, one of the things that both David Morgan and I and the other members of the Morgan Report are involved in, and we've reported on for about 4 years, is the Low Digital Silver Project. And this is something that is really continuing to grow, and we think has a lot of potential for even at some point taking a significant supply of silver off the market as people hold silver digital coins that are backed by physical silver and stored in vaults around the world. So if they'd like to learn more about that, they can go to ag.lode.one. That's ag.lode.one and take a look and see what they think.
Fantastic. David Smith, once again, thank you so much for your time, and God bless.
It's nice speaking with you, Elijah. Take care.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.